I am Scott Remite. I'm going to be your presenter for today. I'd just like to start out with my contact information at the beginning of the webinar. So for any reason you have to pop out early, something comes up, and you want to receive more information about the Borrow Smart Analysis tool, feel free to take down my direct number here, 1-800-963-1900. I'm extension 1579. And then my email, SREMITE@mssllc.com. I'll leave that up for another couple seconds. And I will show this one more time at the end of the webinar as we're going over the pricing special I will be offering. As I said, I am your host, Scott Remite. Just want to give a little background on myself. I am the Borrow Smart Analysis Product Manager for Mortgage Success Source. I have trained over 1,000 loan officers and a couple hundred companies on the Borrow Smart Analysis software. I have 6 years experience in the financial services industry, and then I spent the last 4 years with Mortgage Success Source. I have my master's degree in finance from Rutgers University. I also want to explain who Mortgage Success Source is. You may be familiar with some of our core products. By core products, I mean the Mortgage Market Guide and the Loan Toolbox. Mortgage Market Guide provides loan officers with up-to-date information and the driving force behind interest rates. Loan Toolbox is a professional development course for loan officers. Platinum Marketing is an end-to-end compliant marketing system. The tool I'll be showing you today, Borrow Smart Analysis, is a compliant loan presentation tool. And then Vantage Production, our newest instrument to the suite of products, is a corporate-minded marketing and presentation solution with a CRM built in. So if you want to learn any more about our other products besides the Borrow Smart Analysis, you've been meaning to take a trial out or look at one of them, feel free to use my contact information, and I'll get it to one of the sales reps assigned to each product. I just want to go over our outline today and what you're going to see in this webinar. First, I'm going to start with compliance in the industry today and how it relates to Borrow Smart. I'm going to talk about higher interest rates and what that means to you. I'm also going to talk about where did all the refinances go. What that means is as these higher interest rates maybe pop up and we get through this refinance market of the past 2 years, how are you going to navigate the purchase market and how we use Borrow Smart to help you. I'm also going to talk about enhancing relationships with referral partners through Borrow Smart using our mobile application and open house flyers. I'm also going to be offering special pricing for anyone that's not a member of the Borrow Smart Analysis tool. So available today only. I will be offering a monthly and annual rate of this product. And if you find some interest in it, we can talk about that after the webinar. So as I said, I'm starting with compliance. And the reason I'm doing this is because the CFPB, which stands for the Consumer Financial Protection Bureau, is more prevalent in our industry than ever. And what I have here is a sample refinance email that I actually inquired about myself. I sent this to a top 5 origination company. I removed all the personal information to protect the loan officer and myself. But here he's trying to convince me to do a refinance. This was a couple months ago. It's got a lot of good quality information. A lot of loan officers send emails like this, and they probably take about 15, 20 minutes to create. Unfortunately, when I click to the next slide, everything there highlighted in yellow goes against new compliance that's been put into our industry. The CFPB actually says any piece of information that's now transited between a loan officer and a borrower falls under these same marketing guidelines. And what I mean by marketing guidelines, trigger terms, period of repayment, APR disclosure, everything there highlighted in yellow has to have the correct disclosure. To be honest, will a borrower probably sue a loan officer or a company over a piece of marketing that's missing a color scheme or a logo? That's probably not going to happen. But if they get to the closing cost table and their rate's a little different, their payment's a little off, anything that affects their bottom line and they have that piece of email that was communicated between them and the loan officer, that LO and company are now liable. So it's definitely something you want to make sure if you do send these emails out, you have the correct disclosure. But that's where my system comes into play. What could it be? It could be an easy-to-create professional sales presentation that'll make sure, first of all, you're compliant, and at the second end of it, it'll definitely make sure you're presenting more professionally than the loan officer down the street. But why have we developed a tool? Well, one is compliance, and the other is sales. As a company or loan officer, you spend all this money on licensing, marketing, your tools and your systems, going to training in advance, making sure you're experienced in the industry. But what actually happens when you get that client on the phone or in your office? We actually found that the highest conversion rates were with face-to-face meetings. There's no big surprise there to anyone that's been in the industry. It's typically around a 30 to 40% conversion rate when you meet face-to-face. That drops dramatically when you have either a phone lead or an internet lead. It could be less than 10% when someone's just calling about rate. So what do we try and do? We try and emulate that face-to-face conversion process through internet screen sharing. Built into my system, which I'll show you in a little bit, is a live screen sharing method where, picture this, a loan officer calls in and asks what's your rate on your 30-year mortgage. Instead of giving them a quote, take a step back and ask them why they're looking at a 30-year mortgage. Ask if they have 5 minutes to kind of go over some loan options. Keep it very broad. Most people will say, yeah, so you buy your computer right now? Well, I have a computer. Well, just go over there. I'm going to send you a link. Click that link, and we'll go through some loan options. I'll be glad to show you my rate that I'm offering, but I want to make sure that 30-year is right for you based on your current situation. If they've called any other loan officers in the past half hour, whenever they decided to look at loans, this is really going to set you apart and make sure that borrower understands what you're trying to do for them. At the end of that call, you say, you know what, don't worry about taking any of those numbers down I showed you. I'll send you a copy of everything we went through for your records. And if you don't get through with that closing process, you don't take it to that next step, then great. They do call a few other people. It's just going to make you really stand out. But at least you went through that consultative approach, effectively painted a picture of what you were trying to convey to that borrower, and really make them understand what is the best loan option for them based on their current situation. Taking away from that, am I eligible for this product, but more what is the most suitable product for me? What this system is trying to do to convert that lead into a loan is answer 3 questions. So besides trying to emulate that face-to-face meeting where we know conversion rates are higher, we're also trying to peek into that borrower's head and effectively answer 3 questions. Number 1, do I have the cash right now? Can I afford it today? That all relates to cash at closing. So if you could say, I have those closing costs, or if I'm doing a no-cost refi, it absolutely makes sense. Just make sure they could afford it today. Do I have the cash flow? Can I afford this each month? So every month I'm able to make this monthly payment on the mortgage. And then most importantly, can I afford it later? Here's that suitability. What's the best loan for me over time? And this applies to either a purchase or a refinance scenario, sometimes comparing FHA to conventional, comparing their current mortgage to 3 prospective products you want to move them into. So when you're showing the borrower, look, it makes sense right now, it makes sense on a month-to-month basis, and most importantly, based on your time frame of living in this home approximate for the next 10 years, this loan's the best option for you. What's stopping you from moving forward today? And you ask that question, and a lot of times there's a pause. Well, nothing. Let's get started. So it's just a matter of peeking into the borrower's head and effectively trying to answer these questions with a tool, and that's where my system comes into play. Once again, I'm just showing my contact information for anyone that wants to learn more information about this system. I know we had a lot of people join in the last 5 minutes. I'll just leave it up there for another 10 seconds if you want to jot down my number and my email. But after this, I'm actually going to get into the program and go over some of the real-life examples I want to show you. Let's get started with the actual product. So now that I gave you an overview of why we see a fit for a tool like this in the industry today, let me show you the actual product. What I'm in now is the Borrower Smart Analysis program. It's a web-based software, and what that means is we provide you with the username and password. You're at work, you're at home, you could access this anywhere, iPads, anywhere where you have internet access. So picture being in an open house with a realtor, maybe on a Saturday, and there's some clients looking at that home, being able to show them some loan options right there on your iPad. It's a great way to build those relationships with realtors through open house, and also maybe even create open house flyers in here. That's a template we have along with the purchase, the refi. I'll just show you those right now because I'm on it. We have a template for everything you'd probably want to do in your business. A strict liability review with the client's monthly liabilities, a refinance template, purchase, second home, buy versus rent, and then that open house flyer I just mentioned. I want to start off with some branding just because I feel it's necessary because the product I'm going to show you is branded. We allow you to upload your company logo, a personal headshot, all your personal contact information, pick a color scheme, and then click Save. You do that one time, and then every presentation that comes out of the system is branded with your contact information along with your company photo and logo. What I'm going to do are a few sample plans here to show you the process, what it takes to create a refi and then a purchase and an open house flyer in the system. Each one will take about 5 to 7 minutes, and that's the picture I want to paint. This is a very intuitive system, and what I mean by that is it's free-flowing. You're not going to spend a lot of time learning it. Most of the softwares out there have a pretty large learning curve from what I've experienced, whether it's CRMs, marketing systems. That's not the case with this product. After about 2 to 3 plans, I was really able to pick it up and run with it. I would say I was probably 85% efficient. And then over the next few months, I got into the more advanced features, like, for example, biweekly mortgage payments, doing debt refinances with credit cards built in. But that's not in my everyday plans. Most of my 9 out of 10 clients that I do were just simple refis or purchases. But when I came across those more detailed examples, I learned on the fly. We also are very big on training and support over here. So as you're watching this, keep in mind I am the manager for that product. I have a sales team and a customer support team that support our company with this. We also have training and education that are built into our site. So right up top, this training and support. If you were to come onto the software, you ever needed to watch our video lessons, do some case studies where we sat down with loan officers and show, here's how to do the FHA versus conventional, here's how to do those refis. We have a full YouTube channel dedicated to our training on the site. With that, let's actually get into it. I'm going to start off with the refi and then move into the purchase and open house flyer. So I'm going to create a brand new plan. You'll see right here, these are the most recent plans I've worked on. I do have an archive on the right, so it archives every plan you've ever done for compliance reasons. So the refi is already selected. Let's just call this the webinar refinance. And you can make this client information box as detailed as or as simple as you like. So let's just call this one Scott. I'll use my name as the client. And that's really all I need. I need a plan title and a name. I can move on from there. If I want to put his income, tax bracket, email address, I can go into all those fields, but I'm not required. This is all pre-GFE. I do need a current liability. Since it's a refinance, I got to put in his current mortgage. So I'm going to add a liability, pick mortgage from the drop-down menu, and then enter some details. I'm doing something that's fresh in my head. This was a $300,000 property value. The borrower was in the 30 year. If it was a different program, I could select that program. He's with Wells. He put 20% down on the loan originally. This was back in January of 2010. He's at 5%. It'll calculate my P&I payment. He's at $228 for balance on the loan right now. Annual property taxes, $1.25 a year, another $75 in homeowners insurance, and there's no MI because he put 20% down. I click Save. Okay, now it's saved. I see my current liability right there. I'm going to click Cancel. There's only 3 tabs in the system: Manage, Borrow, Present. Manage is your client information. Borrow is where you're going to show those loan scenarios, and then Present is where you decide how you want to get that information over to your client. Keep in mind, I mentioned it before, I could have started the screen share at any point. So the Share My Screen option brings up a software called iLink, where then I can send a link to my borrower just like you guys clicked on today, and he could see my screen as we're on the phone together. So throughout this entire process, he could be seeing everything that I'm entering. In the beginning, I felt it was best for me to have the final product up on my screen and then share with the borrower. I wasn't comfortable until about 4 to 5 plans in with the data entry, so I said, you know what, let me get that final product up. I'll show him what it looks like, and then I'll share my screen. Nowadays, I'll actually start right in the beginning. As I'm going through it, he'll see my screen throughout the whole process. So I'll let you be the judge of that if you use the software to say, you know what, in the beginning, I want that final product up, or after a couple plans, if you feel comfortable, then just do the whole thing as you see your screen. But I'm going to go over to the Borrow tab right now. And here I'll see my current mortgage with Wells Fargo right up top, my rate, my loan amount, full payment right there. First loan I'm going to show them is a 30-year at a better rate. So I'll type 30-year at 3.5. You could label it whatever you like. That's an open field. So I'll pick a 30 for my drop-down menu. My 3.5% rate's already there. I'll click my calculator. And I have some default closing costs entered. I'm just going to make up some mock numbers. I'm going to type $5,500, and I'll label this total closing costs. So let's just say it's going to cost about $5,500 for this borrower to do the loan. You know what? I want to finance those. I'm going to click Include in Loan. I click Save. So I added that to the loan amount. His payoff amount was $228. My new loan amount is $233,500. I'm going to click duplicate on this second box. It'll copy everything I just did. Then I'll label this one 15-year at 2 3/4. And I'll pick a 15 for my drop-down menu. Put in my rate, 2.75, and I'm done. You'll see it already pulled my closing costs from my 30-year I entered. I'm going to go over the fields because I know for a lot of you, I see some familiar names, and I'm sure it's a lot of you, this is the first time you're seeing this system. We keep these closing costs broad, and this is because this is a pre-GFE system. You can't get too detailed with your closing costs. So I don't know. I know some people may use those emails I showed before. Some people may have Excel spreadsheets that show different loan options for clients, and maybe they get real detailed with their closing costs that kind of mirror a GFE. Unfortunately, that's something you can't do. It's just, there's a rule in compliance right now that says if it looks like a good faith estimate, it could fall into that area of a good faith estimate. And then your disclosures and what you actually have to require to get, as far as information-wise from the borrower, increase tenfold. So you really need to keep your closing costs broad. You want to get them to as close as you think they will be on the GFE, but keep in mind everything that goes along in our system has the correct wording to let a borrower know this is a pretty good faith estimate quote. So you'll see there's a field for origination fees if they're find any of the points on the loan. I labeled this one total closing cost, your prepaids. If there's any lender and seller credits, this will be applied against the closing cost. So say, for example, I wasn't going to finance them, but the lender was taking care of the closing costs. I would show, look, there's a $5,500 credit from your lender. And then you'll see at the bottom, there's an open field. I could label this HARP credit, whatever that may be. And that, once again, will be applied towards the closing costs. Up top, this is a VA, FHA, USDA loan. That'll actually add a field. So if I was doing a streamline refi, I had to add in that 1.75%. I could finance that, and you see the box over here for MI. I'll go over that in more detail when I'm doing the purchase because I'm going to do an FHA versus conventional. But for this option, let's just stick with that $5,500 rolled into the loan on both scenarios. You'll see I have a third box minimized. I can show up to 3 loan options per presentation. I'm not required to. My thought process behind this is I want to keep it as simple as possible, but also driving the borrower to move forward. What I mean by that is I'm not going to show other monthly liabilities like credit cards, auto loans, student loans, unless I'm giving them a debt consolidation strategy, unless I think that's going to help the borrower move forward on my presentation. Maybe taking them from a $3,000 a month full payment with all their liabilities to a $2,200 a month payment by consolidating some of that debt. In this example, I'm just showing mortgage to mortgage. I think a nice strategy where I'm going to show them a wealth building option, which is the 15-year, pay off that mortgage faster, and then a monthly option where I'm going to save them X amount of dollars per month. So I'm giving them 2 options. I'm going to minimize that third and just show these. You're going to see those 3 questions I talked about in the beginning of the webinar. Does this make sense right now? Well, in this case, look, your closing costs equal $5,500, but you got some equity in the home, so I'm going to finance them for you. It's not going to cost you anything out of pocket today, so it absolutely makes sense right now. What about on a month-to-month basis? Can you afford this each month? Previously, you were spending $1,675 on your mortgage. The 30-year at 3.5%, I'm going to take you down to $1,436. I'm going to save you $239 a month. Or if I'm going to move you into this 15-year and get that mortgage paid off faster at 2 3/4, that will be an additional $297 a month. But most importantly, does this make sense over time? What's the best loan option for me over time? I'm going to set a minimum payment requirement with that toggle switch, and you'll see the minimum payments flow across the board. And then I pick a time frame. Maybe this borrower tells me, I don't know, I'm going to be in the home the next 10 years. What I could do then is show the borrower over the next 10 years how much better off he will be by doing this refinance. And I have to take a step back because we actually come up with a full wealth impact. It's not just a focus on payment savings. It's not just a focus on interest savings. It's a full-scale wealth impact for a borrower, the net suitability of one loan compared to another. And what I mean by that, in the first scenario, compared to his current mortgage, he's saving a dramatic amount in payments. He'd be making $172 versus $201 over those 10 years. But I also have to take into consideration he's losing a little equity. He's dropping about $5,000 in equity over those 10 years because he's starting this loan from day one. So his total net benefit with the combination of payment savings and a little bit of loss in equity he's $23,000 better off over these next 10 years. And how I'd present that, I'd say, I think this guy's name is Scott. I'd say, Scott, listen, I told you right now it's not costing you anything out of pocket. We can finance those closing costs. I'm going to get you an extra $240 in your pocket. What does that mean for over the next 10 years? It would cost you about $24,000 not to do this refinance. So what's stopping you from moving forward today? I know it's a lot of paperwork, but I think 24 grand over 10 years, $240 in your pocket each month really makes it worth it. If he's still coming back at you saying, you know what, I don't want to start a mortgage from day one. I'm 3 years into this one. I just want to keep going with it. Well, Scott, let me show you one other thing. I could take this calculator and add a payment. I'm going to add the money he's saving per month and then click Save. I could do one of two things with that. I could either apply that towards a savings account and show him, look, you put that into a savings account at a 3% interest rate over the next 10 years, I'm building your savings balance by $33,000 just by doing this refinance. I know you say you want to retire eventually, so just by doing this refinance, putting that money aside, you got an extra $33,000 in an account. Or if you didn't want to start that mortgage from day one, you make the same payment you were making before. I do that by clicking the repay button. And look, you would have 322 payments remaining on your current mortgage. I'm dropping you down to $259, and that wealth impact was affected accordingly. It went from $23,000 better off to $30,000 better off over 10 years. So definitely a great chart to help borrowers understand the benefit of doing a refinance. I couldn't see any refi lead I get not putting it into a system like this and not effectively displaying the benefit of moving from A to B. You may find sometimes there really isn't a huge benefit, and that'll at least let your borrower know and let you know there's really no way about it. The numbers aren't adding up. Maybe they're only dropping a half a point. Their closing costs are X amount of dollars. They're only living there for another 4 years. Our presentation will actually show them the break-even point, which I'm going to go to now and present. What I have here is the default presentation. You could find one that you like best. Our most common used by our clients right now is a cover, an introduction, a 2-page detailed summary, and the loan program matrix. You'll see we have a 1, 2, or a 5-page. Generally, I only use the 5-page with financial advisors or engineers, someone that I think would see a benefit in additional information. We also have these append materials. So if I was doing a purchase and it was a first-time home buyer, I may include this buying a house append material, which I'll show you when I do the purchase. But for now, let's just stick with the default presentation. So I'm going to preview. What I have here is my branded presentation with my photo, my company logo, my color scheme undetermined, all my contact information, basic contact information of the borrower here. I picked the same name, so it doesn't really make a difference. The next tab is my introduction, where it has my full dynamic disclosure based on the loan programs I presented. And then let's get into the meat of it, the summary and payment information. This is what's going to actually allow me to move a borrower forward. So what I have here is all the details on his current mortgage, his loan amount, how many months payments he has remaining, his interest rate, and then I break down over the next 10 years what his payments look like as far as interest principal, and then I get down to this bottom line, these key numbers. I'm going to say, Scott, listen, my total closing cost should equal about $5,500 for this transaction. It's not going to cost you anything out of pocket. We finance those into the new loan. I'm going to save you $239 a month. You're breaking even in about 21 months. What's that mean? At the 21-month point, it's beneficial for you to do this refinance. You're starting to see a positive wealth impact. And then over the next 10 years, I'm saving you about $30,000. That's $30,000 in total wealth impact, which means that's how much better this loan is compared to your current with the equity in the home and the combination of payment savings. I left the additional $239 being applied to the mortgage, so that's why it shows debt-free in 259 months. I could also say, Scott, listen, if you're comfortable at that $1,675 payment, you could keep doing that on this new mortgage, and that's how fast I could have you debt-free, where you have 322 payments remaining on your current. So just by doing this refi, I'm taking 7 years off your total time frame. If you could afford that additional $297 a month, I could have you debt-free in a little over 180 months even, but your wealth impact point, at what point this loan starts to become beneficial, you're breaking even a little over a year. And then over the next 10 years, you're better off by about 50 grand. I understand that costs about $300 more a month, and you may not be comfortable with that. But due to this low interest rate at 2 3/4 right now, it's a definitely good option to consider if you could come up with the additional cash per month. It'll be paid off in 15 years exactly versus 322 remaining on your current mortgage. If he were to ask me, he were to say, Scott, well, what does this $30,000 mean? I'm not sure. I could go into this wealth impact chart and break it down for him. Look, your payments are almost identical, but look at the difference in equity. This is how much faster you're paying off that home. That's a check what you get cut 10 years from today if you were to sell. So very simple as far as presentation method. We're not trying to reinvent the wheel here. We're trying to stick with some key numbers that'll help you explain this to the borrower by doing this refinance, purchase, buy versus rent, whatever the template may be. The ways I can get this over to my borrower, there's 3 of them. Number 1 is a PDF. PDF is just what it sounds like. I print it, I email it, he's in my office, I have a copy of this presentation in a non-editable format. I mentioned this there on my screen. I'm going to show you how this works right now. It's a full interactive GoToMeeting type server called iLink. I ended my session before. Let's see if I can start it. No, I still have my session open. It's right here. Here we go. So this is the iLink software. When you click that Start Sharing, it brings up this software. For me to send an invitation to the borrower, I click Send My Invitation. Brings up an email with a link. I send this to scott@gmail.com. He clicks that link. I'll see him appear in my meeting. I could either just share the application I'm working on or my entire desktop. So picture if you pay for a monthly service to share your desktop right now, you could eliminate it by going with this software. Or if you don't have one already and you were thinking about investing one, you get a full GoToMeeting server that's included with the product. Last but not least, I could either publish this plan as a website or record a video. I'm going to start with the website. So I'm going to click Publish to Web. Would you like to add a video screen recording? You know what? I don't want to right now. I'm going to click No. I could take this link and copy and paste it into an email and send it to my borrower. When I click this link, it takes me to my finalized presentation. I'm also going to get an email that lets me know as a loan officer that someone clicked that link. So if I were to send that over to my borrower, I get an action alert. I just got that email. Scott Remite has viewed your plan, day and time. It'll also let me know how long they viewed it. So right now I just clicked it. So when I were to X out of this site, I'm going to get another email, and it'll give me the time frame. We're adding an interactive slider, so when they're on this payment comparison tab, right now it says next 10 years, but under it I'm going to have a slider so I can mess around with the time frame. I'm not sure the additional features are going to give the borrower to mess around with. Keep in mind it's not changing my original plan, but just one more way for us to know what they're thinking about for the future, and that's also going to show up on your Client IQ report. Let's say I did want to add a video. So I'm going to click that same Publish to Web, but I want to add a video to explain the benefits. I like this way to present. I think it adds a personal touch to it, and it tries to get my message across without actually having that borrower on the phone or in my office. So if I can't get them to do a live screen share, if I can't get them to come in, I think this is the 3rd best method to emulate that live presentation. So what I'm going to do is click Run. It brings up my screen recorder. I pick the window I want to record in, so let's just pick my presentation. And I'm going to click Record and show you how I would do this. I'd say, hey, Scott, I just wanted to touch base. I know we did that loan a few years ago. With rates at historical lows right now, I think it may be a good time to consider a refinance. I'm going to show you where you're at. First, I just want to go over this introduction page. Keep in mind this is a pre-GFE presentation. I would get you to as close as a closed loan as I can, but I want to paint a picture for you. Here's where you're currently at. You got about $228,000 based on my closest numbers. You got 322 payments remaining. You're at 5% on your interest rate, and you spend about $1,675 a month on your mortgage. If any of those numbers are off a little, this is just my latest record, but what I was thinking about doing was taking into a 30-year at 3.5%. You see that rate right there. That'll drop your payment down to $1,436. I'm going to save you $239 a month. My closing costs they should be about $5,500, but I can finance those for you, so it's not going to cost you anything out of pocket today. And then over the next 10 years, you're better off by about $30,000 by doing this refinance. So It's about $3,000 a year in your pocket. Also want to show you, if you were comfortable making that payment you were making before, $1,675, and you do that with the lower interest rate, you could be debt-free in 259 months, where you got 322 payments remaining on your current mortgage. So I can cut your total repayments by about 7 years just by doing this refi. I want to bring up my contact information. Here it is if you have any questions, or you could just respond to this email. But I just figured I'd try and show you the benefit of doing a refi today with rates where they are. Thanks a lot, and as I said, feel free to contact me. Click done. Obviously, I go into more detail than that, and I try to be a little more fluent, but just trying to paint a picture of how that recording feature works on the system. I type in his name, his email, click send. He opens that email. He'll hear my voice talking about that presentation that I just created for him. So if you've been reaching out to someone, you're looking at their file, you're going, this guy's at 5%. Why isn't he calling me back? Why isn't he responding to my emails? Maybe this last method, where you actually put some hard numbers in front of them, make it real personal, and show them, hey, this is the benefit of doing the refi today. Maybe that'll generate a call. Maybe that'll generate an email back. So you never know. Another way to reach out to people in your database that are probably teed up for a refi, but just not reaching back out to your marketing efforts right now. So with that, that was a refi. I'm going to go through a FHA versus conventional purchase, and then an open house flyer. I'm not going to create the FHA versus conventional template from start to finish. Just for time purposes, I'm going to go into one I've created already, this Joe Smith plan. What you'll see here, the only thing different is I have purchase selected from my drop-down menu. I put a contract price. I made my plan title FHA versus conventional. This guy's name is Joe Smith. It was a fake client again. Put in his income and his tax bracket. I have no current liabilities. I'm going to go over to the Borrow tab. The first program I was showing them was a 30-year FHA. So let's actually remove all this information. We'll create this from start so you can see how it works. So I'm going to put in 3.5% down. Let's say I'm offering 3.5 for my rate. Click my calculator for my closing costs. Right up top, this is an FHA VSA loan. I'm going to click that one more time. Add my 1.75%. Finance it. Let's just stick with this $5,500 in closing costs, but there's a lender and seller credit. But let's just say, you know what? Let's remove that. And this one I want to label as from the lender. I want to show them I'm paying it. It's the lender credit. $5,500. MI at 1.25 a month. To continue for 60 payments, 78% on loan to value. Since it was already done, I want to make sure it pulls through. Okay, and I see it added my 1.75%. My loan to value is now 98.2. I have my first option done. My FHA is completely done. And then I want to do a 30-year 5% down. So what I'm going to do is I'm going to click duplicate. And once again, I'll copy everything I just did. I'll go into my calculator, remove the FHA funding fee, adjust my MI. Maybe he's like 0.86 on the conventional loan. Click Save. Just make sure I get back down to 95. And I'm done. The third option here, I have a 30-year 5% down with the lender-paid mortgage insurance with an increase in rate. I don't know if some of you offer that to get rid of the monthly mortgage insurance on some conventional mortgages by either popping up the rate for a little and you paying those fees, or having the borrower pay that at closing, depending on their credit score and how much that'll cost you as an increase in rate or an increase as a additional closing cost. So good option to show clients, and you'll see when I click this calculator, everything's the same except the MI is eliminated per month because we're doing his rate at 4% instead of 3.5. And then it'll show the borrower the only thing he's got to spend out of pocket with recovering the closing costs from a lender credit is the down payment. It's $7,800 with the FHA and $11,250 with the conventionals. And then it compares the conventionals up against the FHA and shows them, look, the 5% down with MI, you're saving $100 a month, or the lender-paid MI, I'm saving you $198. And then once again, it actually compares these mortgages up against each other. And instead of comparing it up to a current mortgage, it compares the conventionals up to the FHA and shows them, look, over 10 years, you're better off by $22,000 or $20,000 compared to your FHA mortgage. The first 5 years, the lender-paid MI is going to be the best. At some point, you'll see an intersection of wealth impacts between the lender-paid MI versus the client-paid MI, because this is at 4%, this is at 3.5%. So at some point, probably around the 8th or 9th year, it's like right in that 9th year mark, the wealth impacts start to line up. And 21, 21, then at 10 years, the conventional with client-paid MI, 22 versus 20. So at some point, the drop in interest rate definitely outweighs the borrower spending that money per month. So you could show that to a borrower. Look, if you're going to be in the home about 8, 9 years, whatever you think that may be, this is the best option for you. You're going to live there over 10 years, you're better off paying that monthly mortgage return. So however you want to present, but it's a great way to show borrowers the different loan options side by side as far as purchases. And then I create my presentation. Same exact thing as I had before, just with the purchase. And whatever loan I want to recommend as far as highlighting, see how this one's highlighted in this, I guess that's like a salmon color, light purple. I can pick that by just clicking this button on the side. So whatever one I want to propose, say I think this middle option is, Scott, I'm going to be here 30 years. I don't want to move. All right, well, let me present that one to you then. Then you'll see that middle one will be highlighted. So same kind of way to present, the PDF, the live screen share, the video, however you want to do that as far as purchase. One of the additional tools in here as far as templates is the open house flyer, and it follows the same process as creating a purchase or refi. So I'm going to go into one I've created for time purposes, and you'll see the Manage tab changes a little. So I have my open house flyer. We have a few different templates for flyer. This vertical one is our most popular. You'll see a referral partner box. I can brand this with a referral partner's information. Once I add them, they're in here forever. So if I work with Jason consistently, he'll have his photo, his company logo. The add button will allow me to enter the realtor in for the first time. And then once I get my realtor information, I describe the properties I want. There's open text fields for additional amenities. I can upload a property photo, go over to the Borrow tab, put in my loan programs, same methods I was doing before, the FHA, the 10% down, 15-year 10% down, put in my closing costs, annual income to qualify, go to my Present tab, and then here the only option is as an open house flyer. And then here you go, you'll see that final product. It's very nice. It's one of the better open house flyers I've seen. It's compliant. This is dynamic disclosure based on the loan programs I'm recommending. You'll see all your contact information as an LO up top, property description, amenities, all the loan options you want to offer with your principal and interest, taxes, PMI, all that good stuff there, and the realtor's information right at the bottom. I want to send this as a PDF, download as a PDF. Once again, keep in mind I could also create that video. So I can create a video of this open house flyer, send it over to a realtor. They can publish it on an interactive website where it talks about the loan options for that property. Really cool stuff. This was all on the presentation tab. This is where I'd say you spend about 80% of your time on the site. There are some additional features that come along with membership that I want to go over now before we jump into some questions. One of them is the mobile app. This is an application you could install or referral partners could install on their smartphone. I picture realtors installing this on their smartphone and sending you business right through this application. For me to invite a new user, I click Invite New User. For Android or iPhone, there's instructions right here with a scripted email up top, so copy and paste and send it to my referral partner, probably my realtor. Once they install it on their smartphone, you're going to see your mobile business card as the home page. Next is this Refer Me tab. What this will allow a realtor to do is send business right through their smartphone. So picture they're at an open house. They come across a borrower who's potentially interested in a refi. They just mentioned something about rates, and they hear it's a good time to refi. She goes, well, let me send you over to Scott. I hear he's doing great things with refinance proposals right now. She goes into that Refer Me tab, puts in the client's name, email address, phone number, refi or purchase. When she clicks Submit, simultaneously 2 emails get sent. one to my borrower with my mobile business card, which you see here, and then one to me with the client's information. So picture a realtor handing 2 paper business cards right over the internet through this application. It also has current interest rates based on a national average, and we add a 1/4 point, and a great payment calculator that thinks a little bit differently. Most potential borrowers know approximately how much they could afford per month and their down payment. This will allow a realtor, based on that information and current loan interest rates, to show them approximately how much of a home they can afford, which is great if they're at an open house and someone's asking them, hey, can I afford this home based on where interest rates are at? Realtors could pop right into your application and then find that info. So this could be sold as a separate service in itself, along with the screen sharing. All this comes as a full member to the Borrow Smart software, along with that core presentation tab. I want to stop for a minute and explain how this system could enhance your relationships with financial advisors, realtors, anyone you're looking to do a referral business with. One of the big things in our industry today is working effectively with referral partners. That's not something new. It's been around forever. I know most of the people I've talked to, most of my clients, have really been refi heavy over the past 1.5 to about 2 years at this point. Us as a company, we do see that changing, whether it's in the next few months or 6 months down the line. It will eventually change, and that's just due to a lot of people refinancing their loans, and we think interest rates are going to pop up a little. If they do hit that 4% mark, there's going to be that shell shock, and people go, well, they were at 3.25, 3.5, 6 months ago. What's going on? So the combination of rates popping up a little and refis drying up as far as candidates, you're really going to need to leverage those relationships to get back to that purchase pipeline, which will never go away. We think as an industry we've hit bottom, and that was probably about 6 months ago, where property appreciation rates as a whole are starting to be on that positive uptick. They did a study over 10 years. There's a national average of about 1 to 1.5%, which is good. It means the industry is leveled out. So how could you use a system like this to build relationships? For one, financial advisors use a system like this on a day-to-day basis. What I have some of my clients doing now is creating potential mock proposals, whether it's refi purchase, and actually using them as an introduction to financial advisors. Sometimes they're cold introductions, just reaching out to them by email and saying, hey, I just wanted to touch base. I just got this new software. This is what I do with my clients. If you ever think someone that you're talking to may see a benefit in an analysis like this, feel free to send them my way, and I'll make sure I take care of them. This is with people they've never talked to before. So it's a great way to give introduction to a referral partner, mainly a financial advisor, and show them, hey, this is how I deal with my clients. I know this is what you do. Maybe we could work something out where we send each other business. Not exactly saying that right in an email, but painting that picture for them. Hey, I'm different than most other loan officers out there. I'm trying to figure out the most suitable loan for my client, taking them through that consultative sales approach, and at the end of the day, we figure out the best product for them. I know you do something like that, so I'd like to send business each other's way. Well, with realtors, having an open house flyer at their request is also nice, along with being able to share that system. So what do I mean by that? I could send an invitation to a realtor where he has a free mirror site, once again, a scripted email with the link. This will allow the realtor to send plans to me back and forth. So they create their own Borrow Smart site. Keep in mind the realtor doesn't even have this Present tab or Borrow tab. All they have is the Manage. But they can go into the system, start the open house flyer, put in their photo, their company logo, describe the property as they want described. We know how detailed they can get when they're describing a property along with their photo and headshot. But once they're done, they say, you know what, Scott, it's time for you to put the loan programs in. They would click Transfer Plan. They'd only see my name. They click Send. Boom. That open house flyer template's now going right over to me. I can finish it up with the loan programs and then send it back right over to them. So this is all inside of that partnership, working with financial advisors, working with realtors, and enhancing those relationships to a very simple sales presentation tool. Last but not least is this microsite. This is similar to the mobile application, but for anywhere where you have internet presence. I have my secure link pasted on a few places. First of all, it's in my email signature. Second, it's on my Facebook. I actually have this link right in my Facebook description saying, hey, are you interested in a refi or purchase? Click here for more information. I'd be glad to go over it with you. What this does is it drives clients to a specific website where they can put their name, email address, phone number, what they're looking to do, purchase or refi, and then once again they click submit. When they click submit, I know someone has visited my artificial intelligence website and requested a plan be done for them. So it's a great way to know you have a potential lead out there on the internet, and anywhere where you have presence, whether that's a personal Facebook, a company web page, a personal web page, I would copy and paste this link with a little blurb, however you want to describe it, but basically saying, interested in a refi or purchase, click here for more information. And they fill out a little questionnaire and lets them know Scott will deliver a plan to them real soon. So that's the majority of our site. I gave you that helicopter type view, but I wanted to paint a picture of how a tool like this in the industry today can really help you secure a few extra loans. And then when used effectively, it will definitely help your borrowers move from that lead into loan process more effectively, and at the same time protecting you against compliance. Unfortunately, compliance and sales usually don't like to step foot in the same room together. Out of all the systems out there for loan officers, this is one that I see accomplishes both, and as I said, they usually don't like to talk to each other. So you're protecting yourself as far as compliance, and you're definitely making yourself seem more professional than the guy down the street. I'm going to go over the questions in 1 second, but I just want to bring up my contact information. I know we have a lot of new faces on this webinar. I want to give you a pricing special for attending today. Once again, here's my contact information. I prefer email. If it's something you need to get tackled right away, you can call in by phone. Email does work best. The cost of this system is $47 a month or $470 for the year. It's very affordable compared to other systems out there. Everything I showed you is included. There's no limit to a number of plans you could do. But what I'm offering today as far as subscription basis, if you were to sign up for the year and you go, you know what, I like this software, I want to learn more about it, I want to get involved, you commit to the year for $470, we're going to give you 14 months. So what that means, you're going to get the 2 free months completely free right in the beginning to get accustomed with it, get really up and running for it. So you're going to have, today's February 19th, you'll have till April 19th, 2014 with the software for $470. If you want to commit on a monthly basis and say, you know what, I don't mind paying a little more over the year, I like to be billed monthly, 2 months for the price of one. So for $47, instead of getting 1 month, you will be active till April 19, 2013. So you get 2 months for the price of one at $47. The annual account is obviously cheaper. It's like anything else in life. Breaks out to about $33 a month over the 14 months. So let me tackle some of the questions. If you didn't submit any questions, I appreciate you dropping in for this webinar, listening in today. It will be recorded. We will send out a recording to anyone that would like to have that. But I'm going to go over these questions now. And as I said, once again, thank you for attending the webinar. Start right from the beginning. Is it possible to get the lender and seller credit broken out into 2 separate credits? Yeah, I think I started to show that in the second example. Let's go back to this purchase, FHA versus conventional. Go back to the closing costs. However I want to label it. Say this first one is just to say lender or seller credit, and then this one was a seller credit. I have that open field to label it. So if I have a lender and seller, that one could be your lender, that one could be your seller. Can we port our rates into the system? Yes. Unfortunately, as an individual account, it'd have to be manual entry. We do allow for integration between this system and a pricing engine. The cost is usually unobtainable by an individual loan officer. Generally, that's done at company levels where they purchase X number of seats for their loan officers and say, you know what, we use Optimal Blue. We're going to integrate this system with Optimal Blue so it automatically pulls our rates. The cost of integration between technologies is not cheap, getting those developers to work with each other. So as I said, for an individual, it's usually, you can put your rates in this defaults tab, but those have to be manually updated. Sorry, I was getting here late. Does your logo always show up on the flyer? Where does our company info show up? My logo does not always appear on the flyer. The most you're going to have, I'll show you. Let me go back to that open house flyer. The reason you see my logo is I have it branded with the Mortgage Success logo. You'll see your company logo there that you set up in the My Account. preview this one more time. So you see your company logo right there, and that's all the branding. It looks like it's coming from your company, nothing from Borrow Smart or Mortgage Success Source. Can we integrate this system with the Leads 360 CRM system? Absolutely. But once again, that's not something that's usually done at an individual level. It's either branches, companies, taking that technology integration to the next level. One of those things we could also do is be able to import clients if you were linking with that CRM, so you'd have an import button, so all that manual entry would be reduced. But once again, the cost of technology integration is not cheap, usually done at a company level. Are we able to show different liabilities being paid off and the benefits for a debt consolidation refi? Absolutely. I mentioned that in the beginning. And it's not the reason I didn't show in this webinar, it's not your everyday case. I know equity is becoming less and less common as people have in homes, but starting to become more common lately. So for example, let me pull up that refinance. I did the webinar refi that Scott Remite won. And I just put a mortgage. I could put something right here like a credit card and show multiple lenders. Average interest rate, I don't know, 11%. He's got a $10,000 balance, and he's making a $450 a month payment on all those credit cards. So I go over to the Borrow tab, and I'll see the credit card right up top. Alternate one, alternate pay means I'm going to pay off that credit card. Yes, want to get rid of it. And then you'll see, look, the cash needed to close is now $10,000 because I'm paying off that credit card. All I have to do is pop that loan amount up by another $10,000, and I'm financing that credit card debt. I'll get rid of that, and then I'll show the borrower, look, you were spending $21.25 before with your mortgage and your credit card. Look, taking down to $1,480, I'm saving you $645 a month, or the 15 years, still going to save you almost $100 a month. So absolutely, you could do those other liability benefits for a debt consolidation refi. Can I upload past clients into the software? On an individual user, no. Once again, sorry, it's manual entry of those clients. But what I wanted to show you, as far as data entry, that Manage tab should take you no more than 30, 45 seconds at most. It's very simple. Do you have a PDF version of the finished product I could print and show my branch managers? Yeah, feel free to email me that request and attach to that email so I have your email on file, because I won't get the report of this webinar till tomorrow. Email me with my contact information. If you're still on the webinar, Clark, I'll show that one more time, and I'll send you a copy of the ones I did today. And last question, as I know we're getting close to time, which presentations you prefer between the 2, 3, or 5 pages? I make that very detailed presentation, the 5-page, only for really financial advisors, anyone in the industry with numbers. Very rarely do I do that for my average borrower. I stick with the 1 or the 2-page. I think the 2-page is just enough, but not too much. I'd say that's used by about 85% of our users. So you can play around with them, but I think the 2-page is most common. Well, that's it, everyone. Once again, I want to thank you for taking the time out today to view our presentation on the Borrower Smart Analysis software. Here's my contact information one more time, and have a great rest of your week if I don't speak to you. Thanks a lot.